Hello, everyone. Welcome back to another episode of our podcast where we break down the important financial topics and how they are impacting your investments. I have always been an advocate for physical gold and silver investing, and today we are talking about something that's been affecting economies worldwide, the devaluation of currency due to fiat money and excessive money printing, and how it all ties back to gold. In this episode, we're going to focus on India, where inflation, currency devaluation, and the rise of fiat money have created a unique financial landscape. We'll explore how these factors are influencing the value of gold and why it continues to be a safe haven for Indian investors. So let's get started. First, let's break down what we mean by fiat currency. Fiat money is a currency that has no intrinsic value, meaning it's not backed by any physical commodity like gold or silver. Instead, it's backed by the government that issues it. In India, that would be the Indian rupee. Since 1971, when the world moved off the gold standard, most currency, including the rupee, are now fiat currency. The problem with fiat currency is that governments can print more money whenever they want. This leads to inflation, and over time, it can cause currency devaluation. Think about it like this: the more money that's in circulation, the less valuable each individual unit of the currency becomes. When too much money is printed, its value decreases. Meaning, your 1000 rupees today won't buy you the same amount of goods or services 10 years from now. Now, let's take a closer look at what's happening in India. Over the years, the Reserve Bank of India has been increasing the money supply, particularly in response to economic slowdowns, financial crisis, or most recently the pandemic. This is done in part to stimulate the economy, but it comes with its consequences. One of the biggest outcomes of printing too much money is inflation. We have seen inflation rising in India in recent years, with the cost of essentials like food, fuel, and housing climbing significantly. But what often goes unnoticed is how the inflation is eroding the purchasing power of the rupee. In simple terms, your money doesn't go as far as it used to. This is what we call currency devaluation, and it happens because the money that is printed, the less each rupee is worth. So, where does gold come in? Gold has historically been a hedge against inflation and currency devaluation. Unlike fiat money, which can be printed endlessly, gold is a finite resource. There's only so much gold in the world, and the scarcity gives its intrinsic value. When the value of fiat currencies like the rupee falls, the value of gold tends to rise. In fact, gold is often viewed as a safe haven asset during the times of economic instability or inflation. Let's focus on how this dynamic plays out in India. The Indian rupee has gradually lost value against major currency like US dollars over the years. If you look back over the last 2 decades, you'll see a steady devaluation of the rupee. This devaluation means the Indians who hold their wealth in rupees are seeing their purchasing power diminish over time. But gold tells a different story. While the rupee has devalued, the price of gold has continued to rise. For instance, if you bought gold 10 or 20 years ago, its value would have multiplied several times by now. This is because the value of fiat currency declines. People tend to turn to tangible assets like gold that retain their value over the time. In India, gold has been more than just an investment. It's deeply tied to our cultural and social practices. Families buy gold for weddings, festivals, and religious events, not only because it's beautiful, but because it's seen as a store of wealth. And during the times of economic uncertainty, like the 2008 global financial crisis or the recent pandemic, we saw a spike in demand for gold. Why? because people trust that gold will retain its value even when the currency in their pocket loses their purchasing power. Let's talk about money printing and its long term effects. Excessive money printing by central banks can lead to hyperinflation, a situation where prices increase at an extremely rapid rate and the value of the currency collapses. While India hasn't experienced hyperinflation, we have seen periods of high inflation which eat into the people's saving and make everyday expenses more costly. For example, during the pandemic, the RBI took steps to inject liquidity into the economy by increasing the money supply. While this helped support economic recovery, it also raised concerns about inflation and currency devaluation. During such periods, many Indians turned to gold as a hedge against the potential fallout of excessive money printing. The value of gold surged, offering protection to those who invested in it. One key thing to remember is that gold isn't just a reaction to inflation, it's a proactive strategy. Smart investors don't wait for the currency to lose value before they buy gold. They hold it as long term safeguard against the risk associated with fiat currency and money printing. This is why gold has historically been considered a store of value, something that will preserve wealth through economic cycles and across generations. Now, let's bring all of this together. As India continues to grow and the government continues to print money to address economic challenges, it's important to understand how this affects the value of your savings and investments. Currency devaluation is a real and ongoing issue, and inflation will continue to erode the purchasing power of the rupee over time. Gold, on the other hand, has been trusted form of wealth protection for centuries. Its intrinsic value, scarcity, and universal appeal make it a powerful tool to safeguard against the risk of fiat currency and excessive money printing. For Indians, gold isn't just an asset, it's a financial security blanket, something that has stood the test of time in the world where currencies fluctuate and economies face challenges. So, if you're looking to protect your wealth in the long term, consider adding gold to your portfolio. Physical gold. It's more than just an investment. It's an insurance against the uncertainties that comes with fiat currency system and the inevitable currency devaluation that follows. That's it for today's episode. I hope this discussion helped you understanding the link between fiat currency, money printing and gold, especially in the context of India. And if you're thinking about the future of your investment, gold might be just the answer you're looking for. Thank you for tuning in. Don't forget to subscribe to the podcast. Follow me on Instagram and YouTube as well for more insights on benefits of investing in physical gold and silver. Until next time, stay golden.